Hello and welcome back, guys, to the channel. And on this video, we're basically going to be talking about scaling up entries according to SMC. Now, first and foremost, we need to have a setup, of course. And from what I had previously this week is that I had this US 100 setup, right? This was a bearish setup, originated from this break of structure right here, right? So when this structural low was broken, we then had an area of supply that we were looking for to see the sells happening from. And of course, we had those sells in this area here and also this area here as a re-entry. Now, I've already done this part here on the US 100 trade breakdown or something like that. But today I'm basically gonna be breaking down this particular area in here. So what we had from this area of supply was that price will of course pushed down and then came to meet this area of demand right here, which is pretty much strong. Hence, it forced price to come back up, of course, mitigate some institutional orders that were left behind in this particular area of supply in here, which is an internal supply. And from there, price is now able to go down and of course, take out these lows here. So let's go down and see how did we get these entries in here and how could have we scaled down in this area here. So scaling down simply means, like using the most of your entries, right? Obtaining as much as you can from a single setup. So particularly what happened is that price had this bullish play in here by creating higher highs, higher lows, higher highs up until this area here when this low was broken and finally made a lower low. So this high now being a strong high. So after this break here, so with this being a strong high, price now creates, like let's just put this here, an overall low, right? And then price comes back up into this area of supply, right? And of course, it tries to go a little bit above, just as you can see, only wicks, just wicking above, which means what? Taking liquidity that existed from here, right? So price simply attempted to break bullish and then failed, and then instantly re-broke again bearish, which shows that this is a pure indication of a bearish market so far. Now from here, what we had, so this was the break of structure that we looked at. So from this break, we simply needed to have an area of supply or a bearish order block, which is basically the last buy before the sell, right? This area here. And as you can see in the market, this area here was the last buy before the sell happened. So pretty much this area here. So let's just reduce some of these and remain with a clear thing, right? Let's just take this out too. So here's where our entry lied, right? So there, just at the retest, and the stop loss was pretty much above the high. And of course, we were looking to target the overall lows right here. We're looking to target the overall lows right here to make this a simple 1 to 8 RR trade. Now, from there, what price had presented us was multiple re-entries that could enable us to scale up in this market. So as I said before, that scaling up is simply obtaining the most out of a market, right? So if it's a bearish market, then we need to obtain the most of it by positioning ourselves in every single lower high in order to take out the lower low, right? In order to take out the lower low, right? In order to take out the lower low, because we know that in a bearish market, price is constantly forming weak lows, right? Weak lows, right? Weak lows, right? Weak lows, right? Weak lows that get taken out over time, right? These lows here, they're pretty much all weak, right? And they always get taken over time until either a strong low is formed and price now reverses back to bullish. Now, until this happens, we need to make the most money that we can out of this strong highs here that come and take out the lows, right? The strong highs that take out the lows, right? The strong highs that take out the lows. Now, let's get into this market and see how have we done this. So from here, price now gives us an entry number 1, of course, and from there, price now breaks bearish, right? Comes up, but it doesn't touch anything significant. Okay, so this is just a high in the middle of nowhere, of course. So price re-breaks bearish again, and from here, as you can see, we have a break of structure. Price now comes up let's clear these. Let's just use this to make it more significant, right? So from there, price goes down and breaks this low here. So with this break, what do we have, right? We have the last buy before the sell, which is this pivot here, right? From the pivot of the wick. So with that last buy before the sell, we knew that price was going to mitigate that area before it leaves. Lo and behold, that's an entry number 2. And the stop loss is always just above the zone or above the high. It depends on your preferences, of course. And from here, price breaks again bearish, right? And creates another lower low. So from this lower low right here, all we needed to see is what? All we needed to see is, of course, that last buy before the sell, which is actually this right here, right? This was the last buy before the sell. And of course, price comes and taps it accordingly. And that's our entry number 3, right? So this is how scaling up is done, right? Positioning yourself as much as possible, right? Yet again, we have another break bearish, right? This break bearish right here, and price forms another lower low, right? That existed from this lower high here. And from there, price now, we want to see price coming up, of course, but where, right? Into an area of supply, right? The last buy before the sell from this pivot of this candle here. Now, of course, right? Mitigation doesn't always happen, right? I say this in the mitigation video, and if you don't know what mitigation is, then I suggest before watching this video, you should go and watch the mitigation video. So of course, mitigation doesn't always happen. So price comes up, that never reaches this area here, and only creates this high and then re-breaks bearish again. Okay, that's fine, right? Because you know it's what price does, right? Price never wants you to catch it, right? It always wants to catch you. So with that being said, we had this low that created this lower high that created this overall lower low. And from here, of course, what we had was, you know, the last buy, right? The last buy before the sell. As you can see, this buy area here was very strong. Now let's see so boom, right there, the last buy before the sell, right? So this is entry number 4 now. This is entry number 4, and our take profit target is always the same, right? We're always looking to take out the lows, right? We're always looking to take out the lows, right? And price, yet again, right? Price does the same thing once again, right? So price, you know, plays around. I believe this was off session. Yeah, it was during nighttime. So price comes in again and takes out this low, this candle right here, and from that break of structure, we now look for the same things, right? So this break of structure here originated from this high that put in this low here. So we're pretty much ranging between these this high and this low, right? So let's remove those and put a clear indication. Boom. So from there, we need to see the same thing, right? The last buy before the sell, which is basically this area here, right? Price bought and then sold to break this structure here. So we're just going to mark this area here, and of course we're just going to wait for price. If price gets here, we'll take the entry. If it doesn't, then it's okay. So price, of course, the price gets here, right? Boom, attempts to absorb it. As you can see, just only wicks coming above, which means what? Absorption, taking liquidity. That's why I said that you know, the positioning of your stop losses needs to be according to your precision, right? If you like it above the zone, then you should be wary of absorption like this. But if you like to place it above the high, it could be more safer, although it could reduce your RR, your overall risk to reward. But you know, that's fine. It's part of trading. So you need to be very careful when choosing how you're going to trade and how is it going to affect your trading. So of course, price makes this low high and comes down and takes out this lower low to put in a new lower low, which originated from this lower high here. And of course, we need to see the same thing, right? The same thing happens over and over again, right? We need to see the last buy before the sell. And so far, our last buy before the sell, according to my analysis, of course, and you know, mind you, this is no financial advice of any sort. So anything you do is utterly responsible to you, right? So that's my last buy before the sell, and as you can see, price has still not yet touched it. This is the weekend. Of course, the market is closed by, you know, price came in and then put in this high that didn't mitigate this area here. So I'm just assuming, so I'm just, you know, like based on my knowledge, this is simply a liquidity high, right? Price is basically building up liquidity on both sides of market, of course. So price could come, take this liquidity and mitigate this area here, taking this buy side liquidity, and then drop down to take this sell side liquidity as well as break the structural low. Now, I hope this video had a lot of impact as well as information to you guys, and I hope you enjoyed it a lot. And if you did, then don't forget to hit that like. Of course, subscribe if you haven't, turned that bell button on for notifications, and until the next one, guys, stay safe, have a nice trading week, and peace out.